Welcome to the 2020 Broker Forecast.
I want to thank our amazing panel.
Welcome to the 2020 Broker Forecast. Again, thank you for everyone being here, especially with the weather. I'm Robert Jimenez with Granite Properties, and I'm honored to serve as the 2020 Board President for the North Texas Commercial Association of Realtors. Thank you. Hello, Dennis. For those of you who are not familiar with NATCAR, this is one of your first events. NATCAR is a professional trade organization that exists to enhance the business opportunities for its members, access to real estate information, education, professional recognition, ethics, legislative advocacy, and networking. I can tell you that I know that everyone at NATCAR, on the 2020 NATCAR board, we're excited about the year ahead and really do appreciate everyone's support that's here this morning. A couple of announcements before we start the program. If you have not done so, please renew your NATCAR membership. You can pay online at the NATCAR website. You can mail in your renewal, or you can call Maria Larson at the NATCAR office. A couple of upcoming events. Our biggest event of the year is the STEM and Service Award, and this will be held January 29th at the Dallas Country Club. I want to recognize each of our finalists. So if our finalists are here today, which I know I've seen several of them, please stand. Sharon Freeberg with Fisher & Company, sorry, great to see you. Mike Geisler, Venture Commercial. Lynn Dowdle, Dowdle Real Estate. Kathy Parmenter, Younger Partners. Congratulations, please, let's give everybody applause. Again, I mentioned this is our big event, and really is a true honor to be a finalist for the STEM and Service Award. So congratulations to each of you. At the same event, we will award our Young Citizens Award. This is awarded to an outstanding professional under the age of 35 who have excelled in leadership and giving back to the community. Our finalists this year are Tim Axelrod, Shop Companies; Elizabeth Herman, CBRE; Max Schwartzstein, Provident Realty Advisor or Partners; John Dickinson, Holt Lunsford Commercial. Congratulations to each of these finalists. We have some limited seats available, so to get your tickets, please go to NATCAR website to purchase. We have a commercial CE class coming up that will be held on January 23rd and 24th. This is Broker Responsibility and Legal 1 and 2. These courses are required for everyone with a broker's license, and this is a great way to keep yourself informed about our changing industry. We want to recognize SIR and CCIM as our partners for today's program. These are both excellent organizations. Thank you to these groups for their support and your partnership. We also want to recognize the leaders for these organizations this year. For SIR, the chapter president is Scott Jessen of Citadel Partners. Scott. The North Texas CCIM chapter president is Tim Beeler of Transwestern. Thank you to all the SRRs and CCIMs that are here today. I want to recognize our sponsors this year. Our gold sponsors are CBRE, Granite Properties, Capital Title Commercial, Bradford Companies, City of Mesquite, Highland Builders, Henry S. Miller, the Colony EDC, Holt Lunsford Commercial, and Frontier Equity. Thank you. Our silver sponsors are the Law Office of Christopher Sullivan, Alamo Title Company, Cawley Partners, Hudson Peters, Duke Realty, Dogwood Commercial, Venture Commercial, Buttry and Brown Development, Total Office Solutions, Reclaim Construction, Lee and Associates, and the Retail Connection. Thank you. Before we get started with the program, I want to thank the 2019 NATCAR board, Brian Jetty, Katie Gann, and Maria Larson for their hard work and continued improvement of NATCAR. Really appreciate all of their help last year. I also want to recognize the 2019 NATCAR president, Ben Appleby. Ben has been on the NATCAR board for 7 years, and I guarantee you over this time, he's served on every committee and helped every way possible. Ben has been an incredible leader for this organization. Ben is a close friend, and I can tell you it's been a pleasure working with you. So thank you, Ben. I want to welcome up Emily Hoffman with Cushman & Wakefield to introduce our moderator and our panel. Emily has been the chair of our membership meetings for 2019, and so along with Mark Smith and Ray Eckenrode have organized our quarterly programs. I also want to say that today's program is being videoed and recorded by Capital Title Commercial and will be available for playback on our website and will also be emailed out. So thank you everyone for being here this morning.
Hi there. Thank you so much for swimming over here. We really appreciate the attendance because we are very excited about our panel to learn what the future holds for commercial real estate. I'm going to start off with introducing all of them actually. Lynn Dowdle, who's going to be the moderator. Lynn is a top producing real estate broker in Dallas-Fort Worth with extensive experience in hospitality site selection, investment sales, land sales, restaurant, ground lease, build-to-suit, and development opportunities. Prior to forming Dowdle Real Estate, she was the Senior Vice President with SRS Real Estate Partners and the John Bowles Company, Trammell Crow Company, and Terra Group. Lynn is a past president of NATCAR Board of Directors. She's also an active member of ICSC and is currently a STEM and Service Award finalist. She's received many awards, which include 15-year heavy hitter, 2019 DCEO Power Broker of the Year for commercial property sales, DCEO Power Broker from 2016 to present. She was a top producer for SRS Real Estate Partners for 11 years in a row and was the Staubach Retail National Champion in 2007. Lynn sits on the Circle of Friends board with New Friends Life. She was also a member of the board of directors for Our Friends Place. She founded an organization called If You Knew, which raises money for clean water in Africa. Her daughter Kelly is an actress, model, and entrepreneur, and her son is a senior vice president at JLL in Austin. Impressive. Susan Gwen Burks, she is a senior vice president at Avis & Young, where she focuses on the disposition of office, land, and industrial properties with an emphasis on in-depth market analysis and strategic asset positioning. Prior to joining Avis & Young, Susan joined Colliers from Case Commercial Real Estate Partners as a senior director of investment sales. Before that, she served as an executive director on the capital markets division at Cushman & Wakefield, representing financial institutions, special services, corporate clients, and private funds. Susan is a past president of both Greater Dallas Association of Realtors and CREW. She also served on the board for Cornet Global Southwest Chapter. She's received many awards. She was the 2000 Stemmons Award winner. She was a 1992 Eastwood Cup winner and 1998 CREW Outstanding Achievement Award winner. Ann Huntington. She's a senior vice president with CBRE. She's in the advisory and transaction services, industrial and logistics group, representing corporate clients for local and global portfolio needs. She and her team have led 850 transactions totaling 51.8 million square feet. Ann has been recognized as the Dallas Business Journal Heavy Hitter, DCEO Magazine Best Commercial Real Estate Broker, CoStar's DFW Power Broker, CBRE Top Producer, Trammell Crow Company Top Producer, and past chairman and board member of the Stemmons Corridor Business Association. Tori Littlejohn. She is an executive vice president at JLL, where she's responsible for representing both local and national corporate clients in facility and site acquisition and disposition. She has 17 years of experience in DFW in addition to her MBA in finance and real estate knowledge. She's been recognized a number of times in her professional career, including Dallas Business Journal's 40 Under 40 in 2017. 2014 to 2016, she was a DCEO power broker. She was Eclipse Magazine's Women Who Mean Business, JLL Club Award, JLL Top Gun Award, and JLL Wolfpack. Tori serves on the inaugural board of Step Up Dallas and is an advisory board member for UNCF. Tori enjoys reading, traveling, and spending time with her husband and 2 children. And Amy Petrovic. She is the principal at Venture Commercial, specializing in land representation in the urban core. She joined Venture Commercial in 2005 and has developed a broad experience level that includes leasing, land sales, redevelopment, and new development. Amy's worked on the redevelopment of Deep Ellum since 2014 and has completed over 45 transactions in that last 5 years. So welcome, Lynn. She's going to ask a lot of really great questions. Thank you.
Thank you, Emily. That was a very thorough bio for everyone, and what an amazing panel. Give them a hand. I'm proud to be in the arena with y'all, and you know what that means. Good morning. I'm Lynn Dowdle with Dowdle Real Estate, and I'm honored to be the moderator this morning. We have an amazing panel who was just introduced. Before we start, I'd like to personally thank all of our sponsors for who this would not be possible. This is the beginning of the year, and we always appreciate so much your sponsorships. I would also like to give a warm welcome to our SIOR and CCIM guests. It's always a special way to start the year to have you here at this meeting, and we value your attendance. Thank you. Just a little housekeeping info. We started a little late due to the weather, but we're going to go until 9:15. So if we have time, we'll do Q&A. Otherwise, we'll just go to the 9:15 mark where everyone is free to leave and swim back to your car. When I was asked to moderate this panel, it was clear that this discussion would be the forecast of how 2020 will look in our industry. A new year, a new decade, translated to, all of us in this room, what we hope is a robust economy with lots and lots of deals to be done. I know we are all anxious to hear what our panel has to say, so let's get started. I'm going to start today with the meat of what everyone wants to know. Everyone is going to have the same question to start off in each of their sectors. Let's start with a 2-part question. How would you summarize 2019, ladies? And what are you sensing 2020 will look like in your sector of the industry? And we'll start with Anne.
Okay. Good morning. So looking back on 2019 and looking ahead to 2020, there are 2 overarching themes for industrial real estate in DFW. That is that e-commerce is not slowing down and the Sun Belt is still leading the way in terms of job growth. So that means we are on a very positive trajectory. I'm going to talk about a couple of what I think are interesting numbers and equations. Every $1 billion in e-commerce sales translates to 1.25 million square feet of industrial space to support it. And in the U.S. in 2019, e-commerce sales were roughly $600 billion. So that's a lot of warehouse space. If we kind of bring it down to the DFW level and job growth, for every 1 new job, that creates warehouse demand of 200 square feet. And in 2019, DFW led the nation with 120,700 jobs. So if you use that equation, that should generate warehouse demand of about 24 million square feet. And guess what? According to our CBRE research, Miller Hamrick is here today. He leads our research group. DFW industrial market ended 2019 with an absorption of 23.7 million. So that's kind of in sync with the equation. That was the fourth consecutive year of over 20 million square feet of absorption. So things are very positive. Excuse me, just a few other numbers for 2019. The vacancy rate at the end of the year was about 5.8%, which was a little bit of an increase, but it's still been very stable, and it's still well below the average of the long-term average of 8%. And total construction deliveries at the end of 2019 was 25 million, and it had a super high pre-lease rate of like 63.4%. And just for comparison, the all-time high for construction deliveries was in 2017, and it was 26.8 million square feet. So looking forward to 2020, we have a good, strong deal pipeline. We're tracking 15 million square feet of industrial space over 100,000 square feet, and that doesn't include 4 1 million square foot deals that are about to be completed in the market. And that's at North Point's Industrial Logistics in Fort Worth, Heinz Building in South Dallas, and 2 other undisclosed deals. So right now, there is 23.5 million square feet under construction. In South Dallas in 2019, well, let me say, development of big buildings has, of course, been pushed to the periphery, South Dallas and North Fort Worth. In South Dallas in 2019, there was a little bit of a pause because there'd been so many big deliveries. The vacancy rate was 18%. But now there's been enough absorption that as of January, it's down at 11%. So we expect to see some new construction in South Dallas, likely an 800,000 square foot building with USAA and Seafried. LPC is expected to kick off a 1 million square foot building in South Dallas. And NFI just bought a building from Dermody, and they are planning to expand that building, which they're about to lease part of it, but they'll expand it and still have another 900,000 square feet there. On Fort Worth, which brings me to Fort Worth. Fort Worth is having its moment right now. Half of the industrial construction underway right now, about 12 million square feet, is taking place in North Fort Worth. Fort Worth has great labor force, great amenities, the land, and that's where the development is headed right now. And it includes all the developers: Hillwood, Skinnell, Heinz, Crow Holdings, CT Realty Advisors, TCRG, and Stream. And South Fort Worth is also becoming kind of an emerging market. On the capital markets front, I'm told by our CBRE investment sale folks that they don't feel any pullback. They have a good pipeline, and cap rates for Class A, down the fairway buildings with good market rents are somewhere around 4.5%, which is a historic low. So we're starting the year with a good pipeline. We've got balanced supply and demand, and looking ahead to the next decade, our population growth was about 2.5 million. Has grown by 2.5 million from 2000, and it's expected to grow by another 1.4 million. So over the next 10 years. So over the next 10 years, we should go from somewhere around 7.5 million to 10 million people. And I think that bodes very well for industrial real estate, because I think all those people will need a lot of warehouse
Love that. Thank you. So good pipeline and the growth. And I think we're going to hear more about how that affects all of the sectors. Tori, would you like to be
Yeah.
next?
Well, from my perspective on the office side, 2019 was a great year. It was another great year over the last decade, I think, in terms of growth, in terms of absorption. The amazing thing about 2019 for me was that so much of it happened in the fourth quarter. I think just looking from our research department, they showed about 47% of absorption for 2019 happened in the fourth quarter. That was kind of right in line with my revenue, where more than 50% of my revenue came in the fourth quarter. And then also just in terms of my group, when we looked at kind of our group goals and the numbers that my group was going in, majority of our revenue came in the fourth quarter. So that normally happens. You have a big pop in the fourth quarter, but I don't know if as much of that has ever happened before. The fourth quarter was extremely strong, but I also think the first quarter is going to be very strong. And looking at my pipeline and things going on in the market, I think there are going to be a lot of announcements of new transactions in this first quarter that didn't quite make for the fourth quarter. I do think 2020 is going to be a strong year. I don't know if 50% of it is going to be weighted in the first quarter, but I do think the first quarter is going to be very impressive when we look back up on it in terms of the absorption. And there's still a lot of activity going on when we look at the pipeline for large transactions in the market. It's healthy. And we wonder, when is the music going to stop or slow down a little bit? I don't think it's going to be in 2020. I think there's going to be a little more measured growth. As we've seen with rental rates that from 2017 to 2018 or 2016 to 2018, the jumps were really, really high, but there was a little more measured growth last year. I do think we're going to have more measured growth this year. I don't know if the velocity of things can continue in terms of increasing rates, but I think it's going to be a good year. I'm excited about it. I think we are going to see a lot of companies similar to the Schwabs and other companies that are doubling down on Texas, where they have a presence here. They're deciding to increase that presence here, whether that's through mergers and acquisitions or just redistributing labor from other markets to the Dallas market, because we have such a strong foundation to help with the growth and productivity in these companies.
Very good. Susan Winberg.
Yes. Thanks, Lynn. Good morning, everyone. Can you hear me? There you go. I would start with saying last year, 2019, overall, it was a very good year for investment sales. But interestingly enough, if you look at the statistics across the four groups of office, industrial, retail, and multifamily, the total transaction volume was actually down. It was down 6 and 7% multifamily, and then industrial. It was down about 10% in office and significantly more in retail, pushing that 40% number. And of course, we all know why that is, the struggles with store closures, the big box retailers. We also know that you can't keep a good product down. And so you're going to see a lot of growth in retail, and you're going to see repurposing. And so that's going to be important for our future here and across the country. The bright spot in all of it was the fact that sales per square foot numbers and unit numbers were up. So significantly in some instances. So you saw it was up about 4% in multifamily on the units. Again, and these are year-over-year numbers from 18 to 19. We saw up 17.5% on the industrial side, and retail was flat. But then we saw office was really the big winner, and we saw office was up per square foot prices about 23%. And that makes a lot of sense. We saw some incredible trades, as you know, for instance, 1900 Pearl in that $724 per square foot range. So with that, that can heal a lot of markets and make a lot of things very good. All in all, the office generated sales were about $4.3 billion. We did see cap rate compression across across three product types. On retail, we did see cap rates go up about a basis point. Actually, the private equity, they were on the buy and sell side. They were the most active, the private equity buyers, then followed by institutional, and then followed by the REITs, and coming in last were our sovereign funds or cross-border players. As a broker, I would tell you it was more difficult. It took longer to get deals closed and across the goal line. I'll probably see some heads like that. And it got more complicated. Some deals, for whatever reason, and they were all different, they had a different twist, they had issues, they had some complexity to them. And some of it was just the continued difference between the bid and the ask. And so therefore, some just didn't transact. And we did see that, I think, across the board. If we're looking at 2020, what does 2020 look like? Well, we still believe that multifamily and industrial are going to be kind of the darlings. They're going to be where the investment community flocks. And that's due to the increasing demand that we're seeing, like Ann talked about, strong fundamentals. And so that makes the investor look towards the highest return of value. Because the continued focus on the DFW Metroplex, and we see this across the country where people are taking note of what we're doing here, the job growth, the labor pool, the younger labor pool, the people that are coming here because they like Dallas. So that's going to continue to keep us very healthy. I believe that live, work, play environments are going to become even more important. And I say this with great respect for the Y and Z generation. They don't want to be in gridlock on the freeway. Well, none of us do, right? We don't want to be in traffic. But in particular, they want to live, work, and play in proximity. And they also want their multifamily product to have a lot of luxury amenities attached to them. So that will be a trend that will continue. Capital is and will continue to be readily available. We're seeing that for sure. And we're going to continue to also see new players on the capital market side come to Dallas. Over the last several years, we've seen people who maybe weren't interested in buying here because gateway cities were more attractive to them, but now they're making the change and excited about our backyard. I think there will continue to be the disparity between the bid and the ask this year. We've got a lot of expectations that have been set very high, as we all know. But I also think that that will drive some sellers to refinance, and they will hang on to their properties and not transact. So I do also think, lastly, that both the institutional and the private equity, they're going to relax their yield some. They're not going to be able to maybe hit the numbers that they have been used to, but they will also not take any more risk. So they'll take a little bit less on the yield side, but no additional risk.
Susan, you touched on it, but I'm curious, after that information, are you seeing a lot of investment capital coming from, other countries and, either reloads to DFW or just bringing the capital and investing in our market?
Absolutely. I think you all saw with the Pioneer deal, we saw Saudi Arabian funds coming in on the finance side. So absolutely. We're in the spotlight, which is great.
Love that. We will now hear from our retail expert, Amy.
So, and can you guys hear me okay? Just wave if you can't. So in 2019, retail continues to evolve. It's a changing time for us. We've seen in 2019 an increase in urban retail, an increase in sort of town center type products. I think that's going to continue into 2020. 2019, we've seen e-commerce sales continue to grow. They've been growing, so it's not a new trend, but we've seen them continue to grow. They've been growing approximately 15% per year annually for the last decade. We've seen the Amazon effect continue throughout 2019. Can't get away from mentioning Amazon. It's really affecting the retail industry. I think it's been a real wake-up call for retailers. I think retailers have really stepped up in response to Amazon. They've stepped up to compete with Amazon, stepped up their e-commerce games. Groups like Nordstrom, Target, Walmart, those have all spent a lot of time and effort perfecting their e-commerce, and they've done a great job stepping up and competing with Amazon. Another thing that's been happening is these retailers have really tried to get customers into their stores. Generally, it's a lot more profitable for retailers to sell an item in store rather than sell online. So someone, for example, like Target has spent a lot of time trying to get customers in. They're trying to make the customer experience a really positive one. So they're doing that by trying to get customers to come in, order online, pick up their product in store. They've also been reinvesting in their existing brick and mortar locations. So just another thing that they're doing to make the customer experience even better and compete with Amazon. Another example that I think is really good, one of my favorite retailers is Nordstrom. This has been in the works for the last couple years, but they've created a concept called Local, which is a really small brick and mortar location. They do not offer any merchandise in a local store, so they focus on style advice, alterations, and pickups and returns. I think that's a really innovative way for Nordstrom to try to compete. We all know that department store sector has been really tough, so Nordstrom's been sort of a star in that sector. I guess as far as 2019, let's mention the holiday sales. They closed by increasing 3.4% retail sales over the prior year. So they did increase a little bit, 3.4%. Online sales, of course, did grow. They grew 19% compared to last year. And then we also saw in-store sales fall 7.7%. I think 2019, we saw retail to continue to change. I think retail is always an evolving thing. I mean, retail has always been changing. When you think about it, Walmart, for example, just back in 2000, doesn't seem like that long ago, but almost 20 years ago, but back in 2000, Walmart didn't even sell groceries. Now, not even 20 years later, Walmart's one of the leading grocers in our industry. So to me, that's really powerful in that years ago, Walmart, it was big, bad Walmart. Everyone was scared of Walmart. People didn't like Walmart. Now it's kind of big, bad Amazon. So I personally think retail is a changing industry, and it's going to continue to change. And then as far as 2019, how we ended, as far as DFW is concerned, we closed the year really, really strong. We are 93% occupied in the DFW market, and that's the highest occupancy we've seen over the last several decades. I think that goes back into the 80s. So we closed the year really strong. And then as far as what we're going to see in 2020, I think 2020 is going to be really similar to what we saw in 2019. I think it's going to be a healthy market. We're going to continue to see a lot of the same things. We have a healthy amount of new construction in the works, at least in DFW market. I think we're going to continue to see high occupancy levels. This does create a little bit of an issue for brokers because obviously we make our living by leasing space, doing deals, and there's just less of it out there. So it's pushing us to try to be more creative, be more opportunistic in our businesses in general. I think in 2020 we're going to continue to see store closures. We've just recently heard even more announcements. Groups like Pier 1, for example, they're going to be closing about 450 stores. Macy's recently announced they're going to be closing 28 stores. And then we saw Taco Cabana, for example, they're closing 19 Texas stores. So I think we're going to continue to see some of that. I think in 2020, it's still a really great time to be a landlord. I think it's a good time to be a tenant as well, especially depending on the category of tenant that you are. I think tenants are still going to be expanding very similar to what they did in 2019. They're just expanding a little bit more selectively. Some of them are sort of perfecting their footprints, reducing their footprints. I think that's going to continue to happen. I think in 2020, we're going to continue to see discounters do very well. This has been a really strong category for retail. Of course, there's been winners and losers in this category, but some of the winners that we're seeing are Ulta, Five Below, TJ Maxx Home Goods, Ross, another group called Ollie's Bargain Outlet, who's newly expanding in the Dallas market. I think we're going to continue to see department stores continue to struggle. We've seen fallout from groups like JCPenney's and Macy's, among others. And then I also think we're going to continue to see apparel stores closing. A lot of these apparel stores are kind of your typical mall apparel stores like J. Crew, Abercrombie and Fitch, Victoria's Secret, Express, The Gap, groups like that. So that's kind of what I see in 2020.
Very good, thank you. So you can see that all of the reports from all the 4 different sectors are pretty positive. So I hope it puts a smile on everyone's face this morning. I know it's tenuous sometimes not knowing what could come, which leads me to my next question. We have had an amazingly long cycle, everyone knows, since 2007. And of course, we didn't see that one coming, the downturn. So what are your current thoughts on a potential downturn, and what are the potential indicators that you're paying attention to? Susan Gwynn Burks, please.
Well, history does repeat itself, as we know, and it's going to tell us that, what goes up comes down, that there will be a market correction. We just don't know when. I guess that's what the crystal ball is for, right? So, but based on the current economy and based on the boom that we're seeing here locally with our job growth we talked about and people moving here, it was always 300 a day, and now I heard recently 350. I don't see a downturn in sight now. Does that mean that we couldn't have an occurrence on a geopolitical basis that could drive that? Of course we could. We all know that. It was good news yesterday with China and the trade war, and hopefully you've mitigated some of that and moving into a new era with China. But we still have Iran, we have North Korea, we have an election, a presidential election this year, which tends to slow things down, and it probably will slow things down at the end of the year or maybe even midstream. But I would say this, with the unemployment rate as low as it is right now, we've never had a recession when the employment rate is this low. And so if that can protect us and keep us healthy, we've got a good shot at it. I think the things that we're paying close attention to right now locally are still the rising construction costs. That's impacting, not only the tenant improvement allowance, it's impacting new development. So we're watching that on the landlord, the developer side. Municipal approvals. I don't know if everybody's noticed, but it's taken longer to get things done on the permitting process, on the working with the municipalities. It's slowing us down, and so that could impede some of our success. Also, insurance. We've all noticed that insurance rates are going up, and probably landlords, owners more than anyone, and that has the impact from our natural disasters that we're seeing, not only in the United States, but all around the world, of course. So I think that plus the fact with the labor pool, as healthy as it is, people are trying to retain their workers and keep them happy, build more amenities. And so I think the labor costs we're watching, we're also watching the media costs as far as marketing expenses, because when you move from paper to electronic, social media, some things, it's causing an uptick in budgets.
So we'll all go today. Everyone's assignment is to go hire 10 new people. Thanks, Susan. Tori?
I think a lot of the same things that Susan mentioned impact my segment of the business as well. Construction costs are always top of mind for tenants wanting to build out space. Rental rates, of course. I think one thing you did mention was what may happen with, with rates. I think sometimes that has a downstream impact on tenants and with lenders and owners and things like that. And so I think it's kind of a wait and see, all those different things. One thing can really impact this economy and what we have going on here in Texas. But I don't think that we are going to bear the brunt of it because we have such good fundamentals. I think we will be somewhat insulated compared to some other markets on the East or the West Coast that if there is a slight dip in things could really cause some issues. I think we'll be somewhat insulated, and it might create some opportunities for us here in the market.
So the question was about, thoughts on potential downturn. On a recent CBRE 2020 Outlook call, the CBRE Global Chief Economist predicts that the growth in the global economy is going to be weaker over the next couple of years. And we are seeing weakness in manufacturing, which is industrial, because of trade tensions and because companies right now are not investing as much as they were. But we don't usually feel those things in real estate because real estate is primarily consumer driven, and consumer confidence is at an almost all-time high. So the strength of consumer confidence is outweighing the other weaknesses. I know some people have told me they don't agree with this, but that economist said that in all recessions, interest rates rise, and he doesn't see interest rates rising anytime soon. So we don't see any reason why this expansion won't continue, and the outlook for 2020 and beyond is good.
Great. Amy?
So as far as the retail sector, some of the indicators that we pay attention to are vacancy increases, vacancy decreases, job creation, job decline, so very similar to these others. Residential growth, restaurant volumes can sometimes be a good indicator for us, and of course interest rates. And then also, I think it was a good point, the construction costs absolutely affect the retail industry, and of course the municipalities also. So those have, I think, been affecting the retail industry. The construction costs in the municipalities is something that has definitely created a little bit of a slowdown just throughout the industry. But as far as the overall, if you look at all these indicators, it does not look like we are heading for a slowdown, at least not for the next year to year and a half. Everything looks healthy, especially in Texas. I think it's hard to guess what's going to happen when you think about the volatility of the rest of the world, when you think about China, Korea, and the Middle East, and we're paying attention to what happened very recently with that. So if something happens in a war or something like that breaks out, clearly that's hard to predict. But as far as just the basic indicators, I feel like we're looking good for the next year.
Great. More good news. Love it. What's up? Headlines read, 2020, making way for the future of change and uncertainty. So I'd like to hear, and I know you would too, the trends that we're seeing in each sector. So let's touch briefly on that, if you don't mind. So let's start with Amy.
So some of the trends, there's a lot of trends in retail, so I'll go through some of them sort of quickly. One of the biggest trends that we cannot get away without mentioning, it's probably the most important trend that we're all seeing, I bet you guys could guess, it's experiential retail. That's a trend that doesn't seem to be going anywhere anytime soon, and that's basically with the brands and the retailers trying to create a connection with the customer. There is a store, this is a good example of experiential retail. There's a store in New York City called Showfields. This is sort of the extreme example of experiential retail. They actually refer to themselves as the most interesting store in the world. I was able to go to it recently in New York, but they're doing 4-month leases with startup and online concepts just to give those groups an opportunity to do a brick and mortar location. You walk through the store, you can go to sort of each section of retail, and they have a little computer screen where you can browse the products. And then, of course, they have most of the products there that you can touch, feel, try on, just try them out. So you get to walk through the store, and then the store also incorporates a co-working space, a cafe, and an event space. The store is probably about 15,000 square feet. It's a couple levels. It's so many little trends rolled up into a ball that creates this location. What's interesting is the co-working space, they don't even charge for that. They're just doing that to get customers into the store, groups to take advantage of their Wi-Fi and whatnot. So that was interesting to see, totally on one end of the spectrum. It's hard to think that that store would work in a lot of other markets. There aren't a lot of markets out there like New York City, but it's interesting to see something on that end of the spectrum. Another example of experiential retail that we're seeing is Kroger, for example. So even the grocers now are participating in this trend. Kroger just recently built an urban location in Cincinnati near their corporate headquarters, and it incorporates a food hall, meeting rooms. They have a Starbucks with a walk-up window. Apparently, it's the first Starbucks walk-up window in the country, incorporated in the store, and they also have a restaurant as well. So when you look at experiential retail and you see grocers like Kroger that are participating in that trend, really makes you think this is around to stay. Even here in Dallas Market, H-E-B Central Market at their Lemon and McKinney location, we have heard they're going to be incorporating sort of a food hall component to that, and they're going to have restaurants inside the actual grocery store. So it's interesting to see those groups evolving and changing as well. Another really important trend in retail is digital brands. That is going to be a big trend in 2020. It was in 2019. I think it's going to continue to be a big trend thereafter 2020. Some examples of these groups are Warby Parker, Allbirds, Casper, and Everlane. And these groups are realizing that they do need and want brick and mortar locations. So that's very good for all of us to see this new category sort of starting to expand. I think another trend that we're going to hear retailers talk about more and more is that they can't actually value their locations by the per square foot sales alone. So that is not necessarily enough to see how that store is doing. These brick and mortar locations are adding something to these tenants. They're adding a media value, and it's sort of looked at now as like a customer acquisition cost. Because an online retailer, for them to obtain new customers, tends to be very expensive. So they're doing this by creating these, brick and mortar locations. So you can't just look at it and see a store per square foot sales and decide if it's a good or bad store. It's just the way that retailers are evaluating it, I think, is going to be changing. And then another category that's very important, continue to be important, is the food and beverage category. That's going to continue to grow and change. It's going to be really important to us in 2020. In some cases, we've actually seen food and beverage category occupy over 50% of the project. We have a project right now in Addison, and food and beverage is absolutely over 50% of that tenant mix. So I think we're going to continue to see this trend. It's going to continue to evolve and change. Fast casual restaurants, those are also going to continue to be a really rock star category for us. Groups like Chipotle and Shake Shack, those are going to continue to expand. Co-working is another trend. I know this is going to come up in the office sector, but co-working has also been really relevant to the retail sector. We've seen co-working groups occupy some of the retail space. Groups like Venture X, for example, they've taken some retail spots. I think co-working, personally, is a trend that's going to stay around long term. I think more people are wanting to work closer to home, work at home. They're wanting to work remotely, and this gives those people that option. So I think we are going to see some fallout just because that category has been highly expanding. So I think we'll probably see fallout from some of the poorer operators, but generally I think it's a strong category. As far as co-working is concerned, these do tend to work very, very well in a mixed-use development. They like to be near amenities, retail, restaurants, and they tend to be able to demand more rents when they are in those atmospheres. So it's a win-win situation for mixed-use projects and co-working.
Thank you, Amy. I want to hear from Tori as well, because co-working space is obviously a big subject. How do you see that working in the future?
So I think co-working definitely is here to stay. I've seen it work out really well with some of my clients who kind of want to put their toe in the water with certain, business units that are just starting up. I think it is a very quick and easy solution for short term. And I think with the enterprise sales that these co-working companies are now collaborating with the brokers to do, I think is working really well for what's going on. I think I personally, we have a co-working space, and I live pretty far north, so it saves me a lot of time and energy sometimes to be able to. So I understand the benefit of the co-working spaces, and I also understand the energy and that you can get from the co-working spaces. Now, I will say that there's some energy that can be distracting in some co-working spaces, but I think the neat thing about it is, as I've visited several different ones, there's kind of one for anybody. There's kind of the high-end co-working spaces. I just visited the Hannah space and the Park District yesterday, which is a really neat concept also. I think they all offer something a little different, but it's a true neat benefit for companies to be able to be up and running really, really quickly and not have to deal with the permitting and not have to deal with the construction costs to really prove a concept or approve a location before they dive in. So I think co-working is here to stay. I think it's not going to be they're not going to be as many. I think there's going to be some consolidation going on. I think landlords are kind of tepid on some of the different co-working companies, but they are here to stay. I think they are kind of a good intermediary between, idea to office space to planning down permanent location. So I've been excited about the co-working trends. I will say on the live, work, play, I think that, of course, that's going to continue to be a trend. Every year, I hope that the transit-oriented development takes off even more than it has, and I will say that several of the clients that I'm working with right now, that is top of mind for them. A lot of these clients, of course, are expanding or relocating to the DFW area, but transit-oriented developments are always on their minds, and I think in some situations that hasn't taken off as much in DFW because our mass transportation isn't as connected as we want to, but I think with the extension of the DART rail line east to west in Irving and some other things that are going on, I really think that at some point it's going to take hold, and being able to get to the airport really quickly or just to be able to sit and read on your tablet on the way to work is an amenity that the younger workforce specifically is really can really appreciate, not wanting to be stuck in traffic, as you talked about. So I think live, work, play, I'm crossing my fingers that transit-oriented development really picks up this year. I know there are a lot of people that could benefit from it as we sit on these highways for 20, 30, 45 minutes. I'm a podcast queen these days.
Many of us are, I think. Exactly. Susan, what would you say is the number one trend that you're seeing in your sector?
No one has talked about, I've got a lot, but one that came to mind was spec suites. And for those owners out there that kind of fight spec suites a little bit in your buildings, it repeats itself over and over when you talk to the leasing agents. People are looking at those suites. They want to get in quickly. It's quick occupancy. It improves your rent roll, obviously, and your NOI. And so out the other side on the disposition of the asset, I think it's a great thing to focus on and a way to go. So that's what I would say. The other thing I would just want to throw out, I don't know, has anyone heard the word agrihood? Agrihood? Oh. Agrihood, and I just read about this, this is where, as we're looking at things to do differently, whether it's a multifamily community or whether it's even in an office building, and Tori and I were talking a little bit about people that are putting fire pits out now, or maybe a cornhole area for a game, or bocce ball. Looking at the younger generations that want, and the millennials on down, that want to step out, they want to, get a little stretching, get some fresh air. I think those are important things. The agrihood is actually people who want to grow their own food, and they want to have a plot out back of the building or out back of the multifamily area, and they want a raised bed, and they want to, maybe grow some food. I think it's a little stress reliever. I think it's also eating healthy. So I think you're going to see some of those trends coming from the younger set.
So they don't get on the internet and order their groceries to be delivered to their door, right? Yeah. Exactly. And top trend in your sector?
Top trend. Well, it's hard to follow the sexiness of retail and WeWork with industrial, but I think it's sexy. Since much of the demand that we're seeing is being driven by e-commerce, the warehouse facilities physically are changing. Building sizes are increasing. Clear heights are increasing to 40. The sizes of the truck courts are getting bigger for trailer storage and for parking. And it kind of used to be that a box, what we call a warehouse, that a box was a box. But it really is becoming, really one size fits all doesn't work now. It's becoming more differentiated because the supply chains are getting longer and users have to be more efficient. So they're really spending a lot of time figuring out what is the right mix for them. You know, if it's Amazon, they might want to tri-load a building, or, you know, they might want 40 clear. For somebody else, 40 feet clear might not work because of the product that they're storing. So we're seeing more differentiation, I would say, in terms of physical facilities.
Interesting. Thank you. So believe it or not, we have about 100 years of experience amongst these experts on our panel today, which is unbelievable. So I wanted to ask a question that, maybe gives a takeaway to the new people in the business coming in, or you're just, starting out on your career path, or maybe this is good for everyone to hear. It's just a reminder. How do you believe leadership, integrity, and teamwork are integral to your work as brokers, and how have these principles influenced your business over the years? Let's start with Tori.
So I think those are very integral to the business that we're doing right now. I think specifically, most recently, I think there are a lot of ownerships in town that we're not necessarily familiar with because they may be from the East or the West Coast, or they may be from out of this country. So I think it's we have to rely on one another when I'm working across the table with landlord representatives. Hopefully that people that I know and that I trust, and vice versa, so that when we're negotiating, that we come to the table both with the highest regard for one another. And a lot of times in these situations, we have to ask for favors. And I think people are willing to share things with you or help you out in negotiating strategies with investors that you may not know, so that you can really, even though your fiduciary is to your client, of course, but I think that there's always a way to create a win-win situation. And I think when you've created a level of trust, when you're dealing with someone and you have the highest morals and standards, that people are willing to work with you to create that win-win situation, and hopefully make everybody a winner for your clients.
Sounds like a long-term decision, right? Ongoing. Susan.
Yes. I think everybody in this room would say those three things are integral to your business and your company and what you do on a daily basis. I think that I was fortunate because I started out my career at IBM, and one of the things that I carried with me was you never disparage your competition. You always sell to the merits of yourself, your abilities, and your product. And I think that's something that I'm proud of our industry and of all of you and our teams, because I do think that is, at the top of our mind. And like Tori said, that wasn't a quid pro quo, by the way. But we're all going to work together, and we're all going to go down the path together. And that's what we want to do. That's what we should be doing. So I think you can't put enough emphasis on teamwork, especially today. And I look out in the audience and I see one of my partners, Bruce Butler. Our other partner is in Mexico enjoying his vacation. But the thing I would say is, on your team, when you choose people to work with that you genuinely respect, that you click with, that you roll up your sleeves and work very hard every day, but you also have fun. You know their families, you respect their whole life, everything they've done in their life. I think that's important. So choosing the group that you're with based upon your values and your ideals is very important.
Thank you. Amy.
So I think integrity, I agree. Same. I agree with, I think those were all good thoughts as far as integrity is concerned. I think it can mean different things for different people, but I think to me it's just really simple, is do what you say you're going to do your best to try to do it every day. And it's hard sometimes and it keeps you late at the office, but I think just trying to do that is just, that's what it means to me. I don't like to overpromise something. I'd actually rather underpromise. So you don't always end up getting the listing that way, but I always end up feeling, not feeling bad about it later. So I think that's integrity. And as far as teamwork and leadership, I agree. I think it's one of the most important things that we have in our industry, and I think in your career. I think if you have the opportunity to mentor someone, you should take it. I think being able to mentor someone has added kind of a meaning and fulfillment to your everyday, day-to-day career. It adds something special to it. I've been able to work with a young lady, her name's Gabby Schaff. A lot of you guys probably know her. It's been amazing to watch her grow throughout the industry, or throughout her career. So I think being able to do that is a wonderful thing. Obviously, it's not totally unselfish. You building your team enables you guys to do a lot more for your clients, service them better, accomplish a lot more. So to me, that's been a really important part of it. I think it also adds a different layer of thinking if you can get a team together, especially with different age levels, and thinking about the changing demographics, the aging baby boomers, the millennials, the Gen Zs. It just helps you think about things in a different way. I feel like it's been very valuable.
Ann?
I'll make mine short and sweet. I think we all know that our job as brokers is to be an advisor and a problem solver for our clients. And I think that to achieve that, we have to leverage those things. We have to provide leadership. We have to have the highest level of integrity. And we have to use relationships and teamwork to provide all the resources and the tools that our clients need to make the best decisions.
And you've heard it here. We promised 9:15. I want to thank our amazing panel. Thank you. It's so great. Thank you. And thank you all for being here, especially getting up and coming out and showing up on this crazy day. So be safe, and we'll see you soon.